Hello and welcome back to another 10-minute investor eye test with your friends at Arcane Adventures. This is Mello and Sasha reporting in, and today we are going to be covering Mavryk Network, a layer 1 blockchain purpose-built for bringing trillions in real-world assets on-chain, accelerating the adoption of Web3 worldwide. How's it going, Sasha? Have you heard of Mavryk Network? You know anything about this new, soon-to-launch RWA chain?
It's going good. It's going good. I don't know much about Maverick, but bringing trillions on chain, that's a huge feat. So I suppose we'll dive in and see, how they plan on doing that. I'm assuming they're going the traditional finance route. Like this is where all these numbers are coming from, taking securities, commodities, other things, and just making tokens out of them. Yeah.
Yeah, if I'm not mistaken, they have a heavy focus on real estate in Dubai in the UAE. I assume that they're going to focus heavily on real estate, but yeah, it seems like they've purposely kept it vague to just encompass this entire space, which in theory could be trillions and trillions of dollar market. But you and I are always keen to point out it's going to be hard to unseat or disrupt, the JP Morgans and BlackRocks that are already doing this sort of thing and building their own infrastructure. So I think that's the main thing that I'm going to be looking for personally. For those unfamiliar, we're going to be looking to see what the token and the digital asset economy looks like for Maverick and determining whether it's worth looking into more, if it's a viable investment, if it makes sense, if they're doing something new and innovative. So we're going to take 10 short minutes. Sometimes we take 11 minutes to look into it. And at the end, stay tuned. We're going to give our verdicts. So yeah, I guess we could just jump right in and we can kind of assume that there's going to be some blockchain type token utilities here, but let's see. Maybe we're wrong.
Yeah, it'll be interesting to see how they try and approach the institutional financial side. Well, here's 10 short minutes on Maverick Network starting right meow. Boom. And I've got crypto rank up already, and this is the profile for Maverick Network. And I think this is not so up to date because they do have a token launch coming up very soon. But right off the bat, some pretty impressive names here for the cap table: Big Brain, Gaff, Cluster, Metavest. So yeah, this is interesting, and they raised 5.2 million so far.
Yeah, and I'm not
Hmm.
sure. It says they're launching on MEXC on the 18th, but I haven't seen anything about an IDO platform. So perhaps they either aren't doing a public sale, which I doubt, but maybe they're. I think they're doing a pretty big campaign of like airdrops and giveaways on Kaito. I can't
Hmm.
confirm that right now, but I think they're pretty active in this attention mindshare capture space with this airdrop campaign. I've been hearing a little bit about them, a lot of buzz. And yeah, maybe MEXC is doing a small raise themselves. I'm not sure. It doesn't say anything here, so you're right. We're operating off of incomplete information.
Yeah, some stale information. But I see here they've got 0.5% of the supply only dedicated to public sale. So they apparently had that going to an ICO, wherever that was. Maybe it is an
Oh,
IEO on an exchange or an IDO on a launch pad. But yeah, no deep dive on tokenomics information yet.
hmm.
Valuations, maybe we could figure that out a little bit later. But I'll pull up the website. And so this is the Maverick website, the layer one blockchain powering a signed $10 billion tokenization deal. That's interesting. They've got like an entire company built around one deal. Hmm.
Yeah, yeah. I think I saw. I can't remember the particulars, but I saw that they had a pretty big deal lined up, and kind of confirms it. They said that right there it says real estate in the subtext, so it looks like that's their major focus. And I wanted to say before, like the main thing that we want to hunt here for is one, what is the tech stack like? Is this an EVM compatible? Is this on Ethereum? It says it's a layer one, so it might be totally proprietary, their own build. I doubt it. I think there's got to be some tie over to some other existing ecosystem. Also, how decentralized is this, and what does the investment look like? Because you and I, we prefer to make equity and token investments when we can. But if it's very decentralized, if this is going to be heavy governance utility, then maybe there is no equity play here. It's just solely, having a piece of the protocol revenue share, whatever you want to call it. So
Hmm.
that's something I'm going to be looking for too. I think I saw a mention of validators too. So I guess that's part of it, like staking or maintaining a locked, I don't know, tranche of tokens to run a validator if it's proof of
Hmm.
stake.
Yeah, I mean, you were talking about blockchains, L1s, L2s, L0s, and so like
Hmm.
the consensus mechanism, the validator network is very important. It does pose some questions. Like you're right, if the tech stack is nothing unique, then they're entering a very competitive arena with many other RWA chains that are live and very active. But they are very clearly showcasing what they're going after: insurance linked securities, bonds, equities, commodities, real estate, debt, and more. And yeah, like this is all ultimately going to live on chain. Let's be honest. That's what I think blockchain does offer traditional finance. It's these more liquid markets, greater access, greater transparency. You just wonder if all this stuff's going to live piecemeal in different places. If that's what that future looks like.
Yeah, absolutely. Yeah, I'm pretty comfortable with that thesis. It's just we've covered some other RWA chains before, like Plume, I believe, which was doing quite well, but I haven't heard much from them. So, like I said before, the main competitor that I'm looking to is not found within Web3. It's actually these fintech, banking, investment bank giants that are probably working behind the scenes to build this sort of infrastructure themselves, so that they can take it all for themselves.
Hmm. There's a lot of bold claims here. I mean, they've got 8,000 transactions per second. That's not very significant, but it's probably enough for
Yeah.
tackling this type of industry. And dynamic annual percentage yield, 3 to 10%. So it seems like they're guaranteeing some yield based on the token. This is the token ticker, if I'm not mistaken. So
Hmm.
dynamic Mavryk inflation to optimally secure the network.
Hmm.
And so they're calling it yield here, but here they're calling it inflation. Interesting. And then
That's
they're
interesting too.
burning.
They have burn and they have inflation, so it's not often we see inflationary chains. It's I thought they most would prefer not to have that.
Yeah, I mean, it might just be like, the rewards that they're referring to, which in that case, like inflation's a dangerous word to tie to that. But they're
Yeah.
burning 50% of their supply. And this is kind of like degen stuff that it turns us off a lot. We've seen these speculative marketing tactics before. And it's like, if you're burning 50% of your supply, why didn't you just launch with 50% less tokens? But
No,
that's not what people do.
I think they mean right there transaction fees. So 50% of every transaction fees burn, and then a quarter to treasury and a quarter to validators.
Yeah, it's still though. I mean,
Yeah, yeah, it's still
that's
pretty degen.
revenue.
And
Yeah,
that's
yeah.
like,
I mean,
if you look there, experience minimal fees, so like less than a cent. Uh, Even if you take the bull case of 8,000 transactions a second, uh, what is that? 800. I mean, that's actually pretty significant, but like I doubt they're going
yeah.
to do that much per second. And then a quarter of that going to validators, a quarter of that to treasury, and then 50% burn. It's really neat and simplified, so I can appreciate that. But I guess it fully depends on volume, right? Like this chain is only as good as its amount of transactions, and it is real estate, traditionally very illiquid. It's kind of like Bitcoin, there's not a whole lot of action. It's more of like people holding assets, maybe staking them or maybe leveraging them for DeFi. But I don't think people are buying and selling into real estate constantly all day, every second.
I mean, we never know, that market might grow to be that,
Yeah,
where
yeah.
people are just actively trading these assets. Maybe they've always want to do that. That's pretty interesting, actually. But yeah, again, this is the funny thing about blockchains that bring a lot of speculation when they're trying to raise money. It's like
Hmm.
you buy the token because it's going to accrue value based on our transaction fee structure and all this economic activity, but at the same time, we are the fastest, most efficient, and cost-effective blockchain out there. So we're going to have near zero fees. It's like, well, which one is it? You can't have both. But yeah, I mean, this is they're just highlighting what these token use cases have been so far. You talk about securing the network. You talk about automated fee burns, and then economic incentives to drive sustainable growth. And with companies like this, you obviously are going to have a percentage of token supply going towards uh, protocol growth incentives, partnerships, maybe even like subsidies for companies or let's say asset holders to bring their assets on chain.
Yeah. Yeah, definitely. It's a nice incentive mechanism to have. Like you want to, especially in the beginning, you got to lay it on thick with getting people in and actually using it for this reason.
Yeah, absolutely. Well, this is their light paper, and it's good to see a light paper. We haven't seen one of these in a while on this show. um,
Yeah.
but they've got a section on the key economic features of the token or the protocol already. They've got validator node thresholds, minimum stake, I suppose, block rewards and inflation, talking about how tokens are going to go out to each validator.
Yep.
Um, the total reward is dynamic, and they're projecting 3 to 10% APY yield. And so, yeah, this nothing groundbreaking so far as like protocol design, right? The only thing that's slightly different or a little bit more degen is the burning.
Yeah, I mean, that's more or less it right here. Like the first one, payment for network transaction fees. So it's a gas token. That those gas fees are negligible, but they still exist, and that will scale with user ship of the chain. And then 50% of that's burned, so that kind of unilaterally helps everybody that's holding the token. In theory, it makes it deflationary, and it's not my favorite utility, but it is a utility. And then you have security deposit for validator nodes. So that's sort of like a reputational slash mechanism so that, you want to limit malfeasance. Nothing new. We've seen that and we've actually designed that before into some layer one and layer two economies we've built. Participation in treasury governance, which ties into what we said before. Uh, how decentralized will this actually be? Is this going to be heavy centralization in the beginning and then transition over to decentralization? Is it decentralized from the beginning, or is it going to be like this pseudo decentralization that we often see where, we always joke about it, but you're voting on the new color for the new logo or something like that, but you're not actually, here it says governance for the treasury. So that's interesting. Like, I wonder what kind of investments or plays they're going to be making financially, investing into their own infrastructure, maybe giving grants to scale the ecosystem. We can never know, I guess.
Mm. Yeah, I mean, these token use cases, like they're very bare bones. I'm not seeing anything really interesting here, and probably more importantly, oh, that's our 10 minutes.
If you
But
see, if you scroll up, it actually said a second time inflation again. They said it, so I think they're actually meaning like this is inflationary. They said to offset the inflation pressure that they're going to burn. So they're not just burning to reduce supply; they're burning to balance supply, which is. You think that's like that means it's inflationary?
well, no, I think it's a fixed supply, and
Okay.
they're referring to inflation as like the dynamic amount of token rewards going out for validators. But yeah, like it's very very bare bones when it comes to the economy side, and that's our 10 minutes. We got to dive into the verdicts. I've got some strong ideas about this, Carmelo. I'm wondering what yours are. Would you like me to go first, or you want to go first?
Yeah, go ahead, man.
Well, where do I begin? Okay, so we haven't seen anything around finances. They raised potentially $5 million, but I haven't seen anything on, let's say, token price, supply valuation, etc. So I don't know what type of valuation they're pursuing in taking this token to market, and that could be a big make or break thing, right? You're gonna make your investment calculation based on like what is the suitable number that they're tying to this token supply. It's a blockchain network token. They've got apparently a huge $10 billion deal. That's great, but we don't
Hmm.
know how that's going to translate to economic activity settling on the blockchain and therefore value accrual in the blockchain token. So there's a lot of question marks up in the air. And then when it comes to the actual tech stack and then the protocol design with it, I haven't seen anything yet on the tech stack that tells me that this is innovative in any way compared to a lot of existing solutions. It seems like they could have taken these assets they plan on tokenizing and just put them on some other existing blockchain and
Hmm.
bypass this whole circus of creating a network. And so I'm not seeing like a huge moat there, to be honest. And on the protocol design, it seems like something that was lazily slapped together from a token economy perspective.
Hmm.
Obviously, you have validator rewards, you've got consensus, you've got governance. We don't know what they're going to govern. But then you have like, okay, rewards going out, and let's just balance them with burning and call it a day. So nothing really innovative or exciting there for me. I'm gonna give it one thumb down. Honestly, I don't think I would
Hmm.
invest in something like this. There's probably a lot of risk, especially this market with investing in another blockchain layer one that doesn't seem to be solving any inherent problems and is built around the fact that their moat is simply a $10 billion deal. So I don't think that it seems like a good investment opportunity for me.
Oh wow, I was expecting sideways, not a down. Yeah, no, that's
Spicy
totally
today.
fair. Yeah, that was spicy, and it's totally fair. And I just want to remind everybody to subscribe and check out our other videos, and leave some comments if you disagree with what we're saying, or if you agree, let us know. Uh, I think I'll start with one thumb sideways. I'm not as spicy today, but I do agree. I think a lot of what you say rings true. Like, there is not so much innovation. That being said, we could never see. We're not even technical enough to dive in an hour, let alone 10 minutes, to see the tech stack and see, like, to be able to validate it. I can't say that I appreciate that they were, let's say, honest about their transactions per second. I can only assume maybe they're lying about that still, but 8,000 a second is not crazy. So they're not like going for this, we're the fastest blockchain alive, which a lot of these, more generic blockchains that don't need to exist. I'm glad that they're latching on to like an actual, narrative. Like, they're like, we are the RWA chain, because nobody else has been doing it so far. Like, we've seen some people trying, some companies trying, but nothing really happening. So I will say that, like, as far as the token economy goes, you're right. We don't know anything about the valuation, equity. We don't know how decentralized this is going to be. I would say that for me to be enthusiastic enough to invest in this, I would have to say that the angle I would approach is, this is decentralized, because like I said, the JP Morgan, BlackRock, all these guys are going to be building the same exact stuff. They're going to be obviously accessing a hell of a lot more capital. So I think that they got a good thing going for them right now. They got $10 billion. You have this gravity of capital. Maybe this attracts way more because they have this starting point, which is significant. And how they transition over to governance and decentralization, how they let people that use the chain actually own the chain, will dictate the success of this project. So I think if they go full on into decentralization, at least in a few years, and the foundation handles maybe new deals, but other than that, everybody runs the validators, they run the network, they determine what happens in the future. I think it's pretty exciting. I don't think we have a decentralized RWA chain yet. If they go centralized like everybody else, then they're just going to be a not so great competitor to BlackRock and JP Morgan, and I don't think they'll exist much longer. So it's up to them. I don't know. I don't know enough from what we just saw. I don't know what their plans are. I saw some mentions of governance, so I can only assume that they are going to have some sort of decentralization, but how much remains to be seen. So that's why I give it one thumb sideways. I would definitely look into it more, try to see what they're doing with RWAs, if they're going to plan to expand outside of real estate, maybe into other types of securities. But you're absolutely right, and I think we mentioned it, both of us, that real estate now, at least in its current form, is not like this thing that you transact constantly. So I doubt they're going to get anywhere near 800 transactions per second, let alone 8,000. Like, it's totally unnecessary in this day and age right now. So yeah, I think that's pretty fair. I agree with
Yeah.
your take. But yeah, that's been another 10 minutes in the books for Mavryk Network. Best of luck to the team launching in a few short days on the 18th on MEXC. I just want to remind everybody we're not affiliated in any way with Mavryk, because sometimes people accuse us of shilling these projects, but we just choose random ones every week, people. Like, feel free to suggest next week's topic or whatever. We're happy to cover almost anything as long as it's interesting and worth talking about. So without further ado, thank you. Like and subscribe if you like this content, and we hope to see you next week. This has been another 10-minute eye test. So long, everybody.
Ciao, yo.